Okay, today we're going to cover the deductions part of the CPA reg exam, and we're going to talk specifically about the changes in the new tax laws that were implemented in 2017 and 2018. They're not on the test yet as of February 2018, but they will be on the test in coming months and years. So we want to talk about them, and we want to talk about both options just so you're aware of the current options on the test and the upcoming options. So we are talking about the CPA exam regulation, deductions, CPA Planet, and here we go, deductions lesson contents, deductions in the big picture, 2018 changes. There's more deductions we cover in the full lesson, but right now we're just going to talk about the changes for 2018. Let's go forward to that screen. Deductions big picture, 2018 changes overview. Deductions is one of the areas that changed significantly for a lot of people with this new tax law. And one of the biggest changes that almost everyone notices is the standard deduction. We will talk about that and the other changes. Here's a list of changes. Standard deduction increased by a lot. Personal exemptions are eliminated. So the total deductions maximum had previously been $36,000 if you had a family of 5. Potentially if you took all the exemptions, but now those exemptions have been eliminated. So even though your standard deduction has been raised by a lot, you got a $24,000 maximum deduction without getting into itemizing. Okay, so that's important to know for deductions specifically. We'll talk about the standard deductions a little bit later, but it's been doubled. Medical deductions floor is now 7.5% instead of 10%. So that's the AMT floor, just a note. And so therefore, if you have $10,000, say you have $11,000 in medical deductions, and say you are itemizing will be a lot less common now because the standard deduction is so much higher. But if you are itemizing, you had $11,000 and your AGI was $100,000. Previously, 10% of $100,000 is $10,000. You had $11,000. Previously, you could only deduct $1,000 of that $11,000 because only $1,000 of that $11,000 was more than $10,000. Now, how much can you deduct? You've got $11,000 expenses. Your AGI is still $100,000, but your floor is 7.5% instead of 10%. So you've got $11,000 minus $7,500 is $3,500 instead of $1,000. This is applicable for 2017. That's important to keep in mind. So your 2017 expenses, if you're itemizing, you can take advantage of this. The tax prep fee deduction is eliminated. This was part of the 2% miscellaneous deductions. Probably won't have a huge impact, but it's important to know. And my guess is the CPA people will put this on the test because it was part of the old way. It's part of the new way now. They want you to know this. Unreimbursed business expenses deduction eliminated. So if you have business expenses and you're not reimbursed by your employer, you can't even deduct those anymore. That is too bad. All of these things are, the counter to them is that we've got the standard deduction so much higher. Okay, the next one is that mortgage interest deduction is limited to $750,000 of principal for mortgages issued after January 1st, 2018. This had been $1 million. So that's a difference. The interest you pay, if your house is over if the principal that you're paying interest on is over $750,000, this could make a difference to you for sure. This is going to affect high income states with high real estate properties, California, New York. So that's a limit on your deduction. Property taxes. State and local taxes are now capped at $10,000, so you can itemize deductions for them up to $10,000. Again, if you pay a lot of state and local taxes like you might in the California, San Francisco Bay Area, Los Angeles, New York, whatever, then you're going to have a limited amount to deduct there. So that's a big difference. So again, I just want to remind you, a lot of this will not be on the test, but you should know it for when they do start putting it on the test. Let's move to the next section. The standard deduction amount before 2018 These are the old amounts. This is, again, probably what's currently on the test. You've got standard deduction, $6,300 for single. Head of household, $9,250. Married filing jointly or surviving spouse, $12,600. Married filing separately, $6,300. Okay, plus you've got the 65 or older. Additional depends on your filing status. Blind, additional amount depends on your filing status. Disaster loss, additional deduction available. Okay, that's the old amount. That's the current amount as of now, February 2018. Let's see what the new amounts have become. Wow, a lot. So single is now $12,000. Head of household, $18,000. Married filing jointly, $24,000. Married filing separately, $12,000. You have to like those even numbers, the nice large even numbers. That's good. Plus you've got the same potential for 65 or older, blind, and disaster loss. Okay, so let's look at a little more detail. We've got the 65 or older. Originally was $1,550 if you're single head of household. Married filing jointly, $1,200. And married filing jointly, both spouses, $2,400. Okay? Now, blindness, single or head of household, $1,550. Married filing jointly, $1,200. Married filing jointly, both spouses, $2,400. Exactly the same, 65 or older, and blindness, and these are additive. You can add these right on top. As part of your standard deduction, you add these right on top of your standard deduction. Okay, blindness, you need an eye doctor to tell you, to certify. Okay, so let's compare that standard deduction other to what happened now, the after 2018 situation. It's exactly the same categories. The numbers have changed a little bit, not as much as with the overall standard deduction. Single or head of household, the standard deduction increase is $1,600. That's if you're 65 or over. Married filing jointly, $1,300. Married filing jointly, both spouses, $2,600. So very similar numbers, but a little bit higher. Blindness, again, the same numbers. So this is an easy one to remember for the current situation and for the old situation. It's the blind is the same as the 65 or over, and we got $1,600, $1,300, and $2,600. So that's that category. So that covers the differences between the current deductions and the new deductions. This is an important part of the tax law. It has changed significantly. The CPA test will reflect the changes, so it is in your interest to know the current situation and the new situation. Let's go back and review one more time the overview of the 2018 changes. Standard deduction increased a lot. Medical deductions floor. Tax prep fee deduction eliminated. Unreimbursed business expenses deduction eliminated. Mortgage interest limited to $750,000 instead of $1 million. Property taxes capped at $10,000. So that's the list of changes and deductions, and we've got the standard deduction changes detailed out for you here. All right, I hope you've enjoyed this overview of the changes in deductions for 2018 tax law, and keep on studying deductions for the regulation part of the CPA exam. And study all the deductions, and you will pass deductions, and you will pass the CPA exam. Great job, and pass the exam.